Amazon just announced that they're buying iRobot for $61 per share or $1.7 billion. Why did they do this? It is a to me, it makes perfect sense. I thought to myself originally, great, they probably sell a bunch of, their vacuums online on Amazon.com, Synergy, blah, blah, blah. Then I started to read a little bit more into it. And it's starting to be very fearful, this big brother type of fear. Amazon wants to map your home. They want to know more about you and your home. The big key to Amazon, according to a lot of people, is the more Amazon understands about you, the better they'll be at marketing to you and getting you to buy more products from Amazon. The more they'll be able to, and people are worried they're going to be listening in on things. Well, guys, spoiler alert. You're probably already having people listen to you. The Alexa, all these things are happening where it's paying attention to the things you said. I'm not a conspiracy theorist. I don't know if that's true or not, but it makes sense. So iRobot is a company that does a great job making a lot of in-home. They make the in-home self-robot, what's it called? Roombas. iRobot vacuums. And I think they even have the Swiffers and all that stuff. But look at this. I mean, this is a good-looking product right here. I went to iRobot.com. I mean, look at that. It's a good-looking product. It goes to the house. It maps your house. It keeps track. This is the spray. It mops your floors. Now, granted, this isn't like your mother or grandmother mopping the floor, doing things like that. So I'm actually surprised that Apple didn't do something buying iRobot themselves. However, a lot of people would say, well, Apple could probably make a better version of it. Fully fine, etc. I don't know if that's true or not, but this is an incredible business. For example, I can't wait for self-driving lawnmowers to be out there. They already have them out there, but I can't wait till they're really the go-to. Now remember, this thing is going to clean your floor. I don't think it's going to clean your floor the same way you do, your mother does, whatever it is. I think it's just going to be it's a very high-level cleaning, not in your hands and knees scrubbing and doing all that stuff. But either way, let's go see if Amazon paid a reasonable price using our 8-pillar analysis for iRobot. So if you're new to this channel, I use our 8 pillars as a 500-foot view of starting to look at a company to determine what questions to ask and if I want to go further or not. I believe the quantitative, the numbered aspects of a company will drive my decision to go further or not. I'm a value investor. I look for situations in which I think a company that's selling for X is selling for below what it's really worth, and it's just going to take time for the market to get there. If that makes sense to you, if you believe in buying $1 for much less than $1, watch further videos, subscribe to this channel, follow me on Instagram, and you'll be able to sit there and determine and learn more about, understand more about investing, because the more you learn, the less you'll fear. So this is our software. If you're already a subscriber to our software and you pay less than a cup of coffee per day, please follow along. If you're not a subscriber, I think you're going to love it as you see more and more about it. So we type in iRobot, IRBT. So first things first. It's selling for $59.59. Remember, I told you, Amazon's buying it for $61. There's a gap there of $1.41. So one option is you can use this as an arbitrage opportunity. If you think that Amazon is definitely going to buy this thing at $61 a share, it's not going to get stopped, nothing's going to happen, it'll go through, that's an easy $1.41 you can make. The question you have to ask yourself, the reason why it's selling for so much less is because it could very well not go through. A lot of things could happen. All right, and if it goes higher than 61 for whatever reason, sell it, get your money in. This is the stock price for iRobot. I'm going to go back a little bit further than 1 year. This was quite the, I think it was like a short squeeze or something like that. It hit like 160, 170 and fell back down. But last year, the high is 98, the low is 37. That 37 was very recent. The COVID crash, it hit $37. So basically where it was at the COVID crash. So a couple of things in the company. They didn't have free cash flow last year. They have 5-year average free cash flow is $40 million on a $1.6 billion company. So we usually only look at companies over $2 billion in market cap, but because this has a specific acquisition play by Amazon, we're going to look at this thing. This is the 8 pillars. Oh boy. Now, this and this are the biggest drivers for me. These are very different. It shows the free cash flow number is lower than the free PE, even though the numbers are flipped. In order to have a lower ratio, it means they make more earnings than do free cash flow. So what does that mean? Well, there's a million reasons that it could be. One could be fraud. I doubt it's fraud, but one could be fraud. 2 is they spent a lot of money in the past that they're now writing off in depreciation. 3, they had a write-off for some other acquisition they did or some impairment charge. There's a lot of reasons why they could be. But what I said before, the 8 pillars tells me a story that I can go out there and do research on. Why are these different is the first question I have. Next question I have, how is revenue up 600 million, but net income's down 60 and free cash flow is down 35? That's another question that I have there. No question here. Love this. Low debt, long-term liabilities divided by their 5-year average free cash flow. They have very, very little debt. I love that. It's hard for companies with very little debt to go bankrupt. So, is Amazon paying a reasonable price? Well, remember, Amazon's going to have other ways of making money off this thing besides buying the company. But let's use our stock analyzer tool to determine if we would buy this company at the current price. The stock analyzer tool takes our assumptions about the future and puts it into the calculator and says, here is what the company is worth to you today based on your assumptions. Because we don't know the future. All we know is that every investment is the present value of all future cash flow. So I'm going to do a 10-year analysis. And even though the growth rate in the last year for revenue was so low, last 10 years was higher, it is slowing. So I'm going to sit here and be conservative, 5, 8, and 11. Profit margin. Last year they lost money, but in the past they make pretty good money. So I'm going to go 4.5, 5.5, 6.5. Free cash flow, I'm going to do actually the exact same thing, even though they've been inconsistent. And for earnings, I'm going to put, for PE ratio, I'm going to put 14, 17, and 20, because this is a company that has a lot of growth potential, but I'm also going to put in a 15% annual return. I put in a higher PE and price of free cash flow because this company has growth potential. I think there's going to be a lot more robots and a lot of better things in the future, and this is the company that's kind of leading the way with it, in my opinion. 15% return. I usually do 12.5. But I did 15 here because there's a lot of unknowns here. So for me to buy this company, I want a good deal on it. So I'm going to hit the Analyze button. Now, when I hit the Analyze button, 6 numbers are going to pop up below. If you like this analysis and you want to rewind and watch it again, please do. But before you do that, subscribe to our channel if you like this, because I want to have you back as we analyze more companies and take a different approach to money than all those other schmucks out there. So, Analyze button. Stock is currently $60 a share. Based on our high assumptions, it's green. Based on our low assumptions, we want to fall in half. And somewhere in the middle is about 20% lower than it is today. That's where we stand, guys. I love you. I appreciate your time. Don't forget to subscribe to the channel. And please watch the next video on our 8-pillar process more thoroughly to understand how to use it. Take care.